All right, everybody. It is Friday, September 2nd. We're coming into a holiday weekend, a long weekend. Monday's Labor Day. Markets in the U.S. are going to be closed. So today, market tried to rally early on, and then that was aborted. The rally came off, and we closed down, not on the lows, but, it was kind of a disappointing turnaround. But again, from what I could see, the commentary today was all about interest rates again. So I basically, I don't pay any attention to that. That's hysterical, that's emotional. So I don't pay any attention to that. As long as my macro conditions are supportive, and they are, then it's fine. We're going through a period right now where people are reacting because that is, that behavior has been pounded into their brains. I just saw a typical headline today on a post online, some article online saying, here's why you have to, pay attention to the Fed. Here's why here's why what the Fed does is going to affect you. All right. But, the gist behind all of these things is the same. It's like drilling fear into you. Drilling the fear of God, and the Fed is God, right? That's how everybody looks at it. The Fed is, omniscient, it's omnipotent, it's all powerful, and that is, the way everybody thinks. That's they see things through that perspective. Anyway, I'm not going to harp on this. It was thin. I used to trade, I was trading many, many years as a floor trader. I lost so much money on Fridays preceding holidays, or any day preceding a holiday. If I totaled up all the days, like when I traded, before a holiday, the losses would be like a supreme embarrassment. And for some reason, I kind of never, at least when I used to be a floor trader, I never was able to break that behavior. I just kept doing it. And I don't think I ever made money trading before a holiday. It's just thin, and somebody could come in. You could get a sell program today, and, this is what happens. What else is going on? So we finished up August with 575 billion leading flows. That's big. Even if we drop back down to 500 billion a month, and I've said this in the past, 500 billion a month is like 25% higher leading spending flows monthly than what we had during the Trump administration, when, the market was going basically straight up. So that is a very satisfactory, that is a very healthy, I should say, spending level. It's not what we had last year, but okay, we saw economic growth go from 10% or 8% down to where it is now, which is like creeping just above 1%. I'll take growth. Growth, if it's slow growth, it's just going to take longer, for profits to accrue, for the stock market to rally. Last year and during the pandemic, when the growth was through the roof, if you think about it, we had, when the pandemic first hit and everything was shut down, and we had that, whatever it was like a 30% contraction in the economy or something crazy. I forget the number offhand. And then once the stimulus started, it shot up to I forget what it was, but it was like a 20% growth rate or some crazy number to growth rate. We had a huge bounce back. But that was because it was hit with massive firepower of stimulus. You know, we're just now getting back to, I can't even say that we're getting back to a normal level because we're above what we used to call normal. We're at least 20-25% above what we used to call normal. The deficit so far is 1.18 trillion. Let's call it 1.2 trillion. That's the highest for the fiscal year so far. But, you know, it's 1.7 trillion below where we were last year. So, you know, that hurts. That's 1.7 trillion taken away from us. You know, it leaves us with 1.2, but, you know, I'd like to have that 1.7 as well. So like everyone who says, hey, the government should balance its books or cut the deficit, well, it just did. And the only way it can do that is by taking it away from us. And the government doesn't need to take it away from us because it is the monopolist issuer of the currency. It can't run out. This is the crazy thing. And this is, you know, this is another one of these things that's repeated and repeated and repeated without anyone, you know, pausing to reflect on what does that actually mean? How does the government, you know, shrink its deficit or balance its books or run a surplus? It has to take it away from us. So like that net spending that goes into the economy in the aggregate and in our pockets, you know, indirectly, I mean, that all has to be sucked out. It has to be sucked out. And we had, you know, 1.7 trillion of that sucked out already. So, I mean, but at least it's still a net positive 1.2 trillion. Yeah, we'll take that. So September, we still have the 15th is that corporate tax payment. I've been saying, I think some of this selling is related to that. I could be wrong. I mean, we may get into September 15th and boom, you know, we may get hit another 5-10% on the downside. It would take out, we could ostensibly maybe take out even the June lows. I don't think that's going to happen, but you know, I'm speculating here. I'm saying that I think some of this selling is related to that upcoming tax payment. And we got the Fed meeting on September 21st. And that's the big thing that everybody's freaking out about. I'm not freaking out about it, but I understand the behavior because the behavior is, you know, as always, it's tied to the God. The God is the Fed. Anyway, listen, I'm heading out to Colorado. I'm going to be starting my travel vlog. No. A lot of you saying, no, Mike, keep doing this. Please keep doing it. It's like, I really appreciate it. I'm grateful for all the, you know, the nice comments that you said about me doing this. But, you know, every day it's tough to come up with some kind of insight or something like that. I mean, I don't even like, you know, I don't even like looking at the market every single day because a lot of this stuff is noise. I mean, you got to look at it over a period of time. You know, I tell that to people all the time. It really, you need to step back and look at this over a period of time. I mean, if you look at the economy, never mind even the market just reflects the growth in the economy. If you look at the economy over any, you know, long history, I mean, it could be, we've been through periods of time, we've been through wars, you know, assassinations, changes in political, you know, control, monetary policy shifts, inflation, market crashes. I mean, the economy over time, it's a growth function. And it's going to be a growth function as long as, you know, the real assets are there, the resources are there, and the people, you know? And the politics as well. I mean, you could, you know, could have a North Korea type of situation, but even there, you know, not in consumer goods, but look, country's got nukes. So I mean, you gotta. I do it, but the daily thing, you know, to come up with some insight every single day. It's like, I know some of you guys are like, this guy's repetitive, whatever. Trying to do the best here. Anyway, I'm going out to Colorado. It's one of my favorite places in the world. I just love the nature. I love the mountains. I'm going to do a little hiking and I'll be back on Monday. So everybody have a safe and enjoyable Labor Day holiday if you're celebrating that. If not, have a great weekend, and see you next week. Bye. Maybe I'll do my little travel vlog from there, huh? I think I will put up a couple of things. See you guys. Bye.